Good morning students. Today we discuss about 12th D commerce. In this morning video we discuss about the chapter capital market. In the previous classes we discussed about the meaning, definition of capital market and also various kinds of capital market and method of issue of securities in the capital market, and then functions and importance of capital market. So various important points are to be discussed in the previous video classes. So in this video class we discuss about the new financial institutions in the capital market. There are various new financial institutions are functioning in order to deal the various types of securities in the capital market. And also in the case of capital market there are different securities, bonds and debentures are to be bought and sold. Financial institutions will helps to the industrial persons and other companies to lend from medium term and large scale funds. So in this class we discuss various financial institutions, new financial institutions. First one is venture fund institutions. Venture fund institutions. So venture capital financing is a form of equity financing designed especially for funding new and innovative project ideas. So new project for any business concern, if they want to invest their money in the new project and a newly started business, they need sufficient finance, sufficient capital. So they can contact venture fund institutions to provide funds. So venture capital funds bring into force the high technology projects which are converted into commercial production. So commercial production means not the goods are to be sold and bought, only the securities are to be bought and sold. So these venture fund institutions will also function like commercial business. Many specialized financial institutions have promoted their own venture capital funds. They include Risk Capital Foundation of IFCI, Venture Fund of IDBI, SIDBI, Technology Development and Infrastructure Corporation of India. And then mutual fund. So financial institutions that provide facilities for channeling savings of small investor into avenue of productive investments are called mutual funds. So mutual fund means a small investments, small savings are to be motivated among the investor. So there are so many classes of investor are there: low income earner, medium income earner, large income earner. So all of them, they will eligible to contribute money in the mutual fund. So mutual fund is one of the channeling savings of small investors into avenue of productive investments. So a mutual fund company invests the funds pooled from shareholders and gives them the benefit of a diversified investment portfolio and a reasonable return. So by way of investing the fund money in the mutual fund, we can gain by way of interest and we can benefit some financial assistance from the financial institutions by way of savings in a mutual fund. Next, factoring institution. Factoring institutions. That means factoring is an arrangement whereby a financial institutions provide financial accommodation on the basis of assignment, sale of account receivables. So factoring is one of the arrangements which made by the financial institutions and providing financial assistance to the business people by way of sale of account receivable. Account receivable means bills receivable. So it is a very good securities in order to convert into cash very easily and also quickly. So the factoring institutions collect the book debts for and on behalf of its clients. Clients means they may be a company, industrial persons, so on. So these factoring institutions collect book debts. That is, book debts means creditors, that is credit customers, for on behalf of the clients. Some of the factoring institutions operating in India are SBI, Factors, and Commercial Service Private Limited, a subsidiary of State Bank of India, and Can Bank Factors Limited is one of the factoring institutions to deal the bills receivable and book debts. Next, over the counter exchange of India. Over the counter exchange of India. So the OTCEI, that is over the counter exchange of India, was set up by a premier financial institutions to allow the trading of securities across the electronic counter throughout the country. So in the nation, throughout the nation, the dealing of securities not based upon the electronic counters, that should be applicable by way of OTCEI, by way of premier financial institutions over the counter exchange of India. It addresses some specific problems of both investors and medium-sized companies. Some of the greatest strength of the OTCEI are transparency of transactions, quick deals, faster settlements, and better liquidity. So this institution will work as a faster medium because of the greatest strength and also the transparency of the transactions. That is, transaction will be open. All the dealings are to be deal quickly. Faster settlements are the special features of over the counter exchange of India. Next, National Exchange of India Limited. National Exchange of India Limited. It was established in 1992 to function as a model stock exchange. So it is one of the institution to deal the securities as a stock exchange. So what are the dealings functions provided by the stock exchange? This National Stock Exchange of India is also deal. The exchange aims at providing the advantage of nationwide electronic screen-based scriptless and floorless trading system in securities. That is, with the help of the net, online trading system will be allowed in these institutions. So floorless trading system will be provided by this institution to deal the securities. The institution is expected to allow for an efficient and transparent system of securities. So all the dealings which are to be made by these institutions are expected to allow for an efficient and transparent systems. Next, national clearance and depository systems. So under the scriptless trading system, settlement of transactions relating to securities takes place. Securities takes place through a book entry. So the scriptless trading system comprises of the following three segments. Because of this, national clearance and deposit system will deal the securities in scriptless way. So national trade comparison and reporting system which prescribe the terms and condition of contract for the securities market. So national trading comparison and reporting system which helps to deal the securities in a remarkable way. National clearance system which aims at determining the net cash and stock liability of each broker on a settlement date. So this system will also helps the investors and also business people by way of a net cash and stock basis system. National depository system which arrange the provide for the transfer of ownership of securities in exchange on payment by book entry on electronic ledger without any physical movement of a transfer deed. So this national depository system which helps stock exchange to deal the securities in order to transfer the ownership from one person to another person by way of book entry on electronic systems. Next, National Securities Depositories Limited. The National Security Depository Limited was established in the year 1996 for achieving a time-bound dematerialization as well as rematerialization of shares. So this depository system will function during the year of 1996 to achieve a time-bound dematerialization as well as rematerialization of shares and other securities. So the establishment of this is expected to alleviate the problem of post-trade transactions in the secondary market. So in the secondary market, all the second-hand securities are to be bought and sold. So that system will be correctly followed by this institution, Stock Holding Corporation of India Limited. So this Stock Holding Corporation of India Limited aims at serving as a central securities depository in respect of transactions on stock exchange. So with the help of the central board, central government advisory, this stock holding corporation will be functioning. So the corporation also takes up the administration of clearing function at a national level. Next, foreign exchange market. Foreign exchange market. So the foreign exchange market about the foreign exchange trading. So this foreign exchange market will deal the foreign exchange trading of securities. So it is the largest, most liquid market in the world with an average trading value of more than 5 trillion per day. So it includes all the currencies in the world, and any individual, company or country can participate in this foreign exchange market. Next, commodity market. The commodity market manages the trading in primary product which takes place in the about 50 major commodity market where financial transactions increasingly outstrip physical purchases which are to be delivered. So commodities are commonly classified into two, that is hard commodity market and the soft commodity market. So commodity market is one of the market to deal the securities in the primary product, that is the primary issue of securities. About 50 major commodity markets were functioning. Hard commodity market means hard commodities are raw materials typically mined such as gold, oil, rubber, iron and ores. These are some of the hard commodities market which are deal in the commodity market. Soft commodities are typically grown agriculture product such as wheat, cotton, coffee and sugar. And then derivatives market. So derivatives market means facilitates the trading in financial institutions such as future contract and options used to help contract control financial risk. So derivatives market facilitates the trading in financial instruments such as future contracts and options used to help control financial risk. So the instrument derive their value mostly from the value of an underlying assets that can come in many forms. Stocks, bonds, commodities are some of the securities are to be deal in the derivative market. So students, with that we conclude this video session and we complete this chapter capital market, and you should go through all the points which are deal in this capital market, and you should complete the assignment, that is choose the correct answers in your commerce assignment notebook. You can write question and answer also. These are some of the choose the correct answers in your textbook. 2 more question answers, 3 more question answers, and then 5 more question answers are there. You can go through it. Answers are in the book itself. You can mark it and write the question answers in your commerce assignment notebook and send a task completed message in the group. Thank you.